Oh, I think we on. I think we on. Yo, what up, party people? I hope everybody good. Good to see your faces. All right. Let me get my little Mo Steph mic. All right. So cool. Welcome, everybody. I hope everybody's good. I hope life is greater. We are here with OYO Stocks. All right. Um, a good time to present to you all that we know and all that we have learned. Yes, everything that we have learned, what we know about dealing with stocks, okay, dealing with bonds, dealing with everything. All right. So we like to get into own your own stocks. All right. Um, so if you don't know me, right? Because I know myself, but I don't know if you know me. My name is Omar Kinsey. I'm the proud founder of OYO Enterprises. All right. And here at OYO Enterprises, we like to really dig in on all the principles, all the factors, all the resources that help us to gain wealth, not just for ourselves, but for our families, for our future generations, not just for our family, but for our people, not just for our people, just for the world, right? Because the more access to resources we get, I believe in us and I believe that we will make the right decisions with it, right? We're not going to build nuclear weapons, right? Say it after me. We're not going to build nuclear weapons, right? We're going to use these resources to rebuild civilization, right? In the manner in which we were sent here to exist in, right? So, right, with all that said, I want to jump into some stock talk. Can I jump into some stock talk, right? Hit him with the James. So I like to go, right? Today, I want to deal with um, a beautiful concept that that we are familiar with, that we love, and that is dear to us, right? We like to deal with some dividends. Ooh, dividends. We love dividends. All right. So let's find the dividend calculator that we like to deal with. Let's go to another browser. I don't like this browser. Okay. Found it. Boom. Nice. All right. So look, this is a website. This is a website called tipranks.com. I love tipranks.com. I don't know the people there. You know what I'm saying? I don't really love them. I like their platform though. Think about that. Um, and in dealing with tipranks.com, one of the features that they have on their site is the dividend calculator, right? And so before we get into it, what is a dividend, right? Let's get super technical with it, right? Let's not even go. Let's not take my word for it, right? Uh, let's go dividends, dividends in investing. Let's go to Investopedia, right? I love Investopedia. They're pretty knowledgeable with it. You know what I'm saying? They've been sciencing it out. Where's investors? There we go. Boom. All right. So dividends, right? When we dealing with stocks, let's read about it. What is a dividend? Dividend is the distribution of some of a company's earnings to a class of its shareholders as determined by the company's board of directors. Common shareholders of dividend paying companies are typically eligible as long as they own the stock before the ex dividend date, right? Dividends may be paid out as cash or in the form of additional stock. These stocks or these dividends are paid out on a monthly basis, on a quarterly basis, on an annual basis, right? But they paid out, right? So, what is so important about dividends, right? Um, in other episodes, we're gonna go in on the large array, the wide array of stocks that are in existence, stocks that you can get into, stocks that that we can use to increase our wealth and build our wealth, right? But you got a lot of people who say that they don't have. I don't think that they don't have it, but they say that they don't have the stomach for the stock market, right? And all that means is that they feel like they don't have the stomach to take L's, right? To be in a situation where they losing lots of money, to be in a situation where, their stock goes up crazy and they feel exhilarated, you know what I'm saying? And then it goes down and they feel like they was in traded places, right? And they feel like they just got kicked out of their mansion. So, so when we're talking about dividends is a little different than regular stocks because stocks go up and they go down every day. But the fact that a company is saying that if you hold some of our shares, right? If you are the owner of some of our shares, we're gonna pay you monthly, quarterly, or annually, depending on how many shares you own. If you own one share, you'll get one share worth of dividends. If you own 10, if you own 100, if you own 1,000, you'll get uh you'll get retribution for the amount of shares that you hold, right? So that's not the best introduction. I don't feel like I explained it all the way to you, but we could figure it out as we go along, right? So let's get into it. So dividend calendar, right? Let's pick a random company, all right? Let's pick a random company. Now, I'm in Brooklyn, right? Brooklyn, New York. Shout out. Peace to the gods out here and the earths, everybody. So I'm in Brooklyn. In New York, our energy company, our power company is Con Edison, right? Or Con Ed. So I want to, one principle that I usually like to go off of is investing in things that you already using, right? Oh, why is it being difficult with me? I don't like this. What's happening? Okay. It's being funky right now. Okay, let's restart that real quick. See if we get up in there. There we go. Oh yeah. All right. So, oh, it's still gonna be funky with me. Interesting. All right, there we go. Boom. All right, so Con Ed. Let's look at that. Con Ed. Where's Con Ed at? Can we find this? Con Edison. Oh, were they playing me right now? You gonna do this while I'm live? Oh, this is terrible. All right, let me go to Google and find it real quick. Rock with me. I feel like we in the space together. We having a good time. You know what I'm saying? It's a party right now. All right. So Con Edison, their ticker symbol is ED. All right. So if their ticker symbol is ED, then we taking out the rest of that word. We putting in ED one time. Boom. Consolidated Edison. Got it. All right. So right now, the share price of Con Edison is $96 a share. Right? $96 a share. So off top, I know a lot of people are like, I can't afford $96 a share. That's expensive. Blah, 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 yada, yada, yada. Right. But so look, if you were able to get one share, let's start out real easy. You know what I'm saying? How did Tina Turner say it? You know what I'm saying? We're going, no, actually not. How did she say it? Rolling down the river. We're going to start it off easy. Boom. So we're going to start out with one real quick. All right. One share. That will cost us $96 today. All right. Now, the expected dividend yield of Con Edison, right? The dividend yield will break down how the dividend yield is created, right? Or calculated. But just for right now, let's just go for face value. Boom. The dividend yield is 3.24, Okay. Now, they pay quarterly dividends, meaning they pay dividends 4 times a year, right? Actually, 3 times a year. I'm bugging. Um, and so if they pay dividends 3 times a year, right? Now, let's just go for example's sake. Let's say, all right, you have you've invested in them, they pay quarterly dividends, and or for that one share, let's say annually you want to invest like a extra $100. You want to buy an extra share every year, right? So say you invest an extra $100 in it annually, right? Now, if we saying your holding period, let's take it down a little bit. How long are you gonna hold this stock, right? You're gonna hold it for 30 years, right? Um, Now the tax rate, we won't do the tax rate right now. Expected annual dividend increase. Now, this is very important, right? So right here, if we go to Con Edison dividend payout, dividend history, right? So right now, what can we find at? The dividend history. Here we go. Boom. All right. So annually, they have a dividend yield of 3.28%, right? Annually, their dividend comes out to $3.16. That's not going to change your life. It's not going to feed your babies. But wait. All right. So look, what happens is, what happens is my computer being slow. All right, boom. So a company gets tax advantages for dealing out dividends, right? Because a company has a choice between taking their profits, taking their revenue, divvying it up with the shareholders, or taking that money and investing back into their business, right? And sharing it with your shareholders comes with more tax benefits, right? And companies love to pay less in taxes. So if that's the case, they're going to pay dividends every quarter, right? So actually, I'm sorry, this is 4 times a year. Excuse me. Quarterly, 4 times a year, right? So we got 77 cents, 77 cents, 77, 70 cents. But in 2022, they said, yo, we're going to pay more, right? We're going to up the ante. But historically, they have gone up every year, right? Just looking from 2013, they're up from 61 cents to now 79 cents, right? Now, boom. Of course, you're saying that money ain't doing nothing for me. That's not paying my bills right now. Hold on. You're going too fast. So, all right. So that's on one share. We're looking at one share, right? Now, they expect the annual dividend increase. You've already seen that. You've seen how it's progressively going up, right? And expected annual share price increase, right? So that's just pretty much anticipating how much this share price is going to continue to go up over time. Con Edison is not a stock that like shoots up like Tesla, right? It's pretty consistent. So let's just leave that at zero for right now. Lastly, we got DRIP, dividend reinvestment plan. Now, when you get your dividends, you have the option to cash out, say, yo, look, I need that whole 70 cents right now, right? Or you could say, no, I'm going to reinvest it into the stock. I'm going to use that 77 cents to buy more of the stock, right? Which is important because it adds up. The whole thing about dividends is that they add up over time. And if you're not at a job right now where you get a 401k, right? You know, that's your investment plan for a lot of people, a 401k. But if you're an independent contractor, if you're an artist or, doing something that's not giving you a 401k, dividends is actually a good idea to be able to create an investment account for yourself, right? That utilizes compound interest. So, like I said, dividend reinvestment plan is where you're not going to take the money out. As soon as you get a dividend, it's just going to be recycled into what you already own, right? So, all that said, I know I gave you, you know what I'm saying, mad speeches out here, but I just want you to, hold on with me. All right. So we got everything input. So we're going to calculate my returns, right? So, uh, no, that can't be right. That's crazy. Oh yeah, for real, after 30 years, is this right? Oh my goodness, that's crazy. All right, let's go with it. Let me change it just to make sure that's true. Yep, it changed. Okay, cool. All right, so we're going with one share. Boom. All right. Now, so we going off of that one share that you bought, right? And going off of the promise of buying one share every year, $100 every year. You spend $100 on a meal. I did it last week. I didn't want to, but I did it. Anyway, you spend that much on a meal lightly. So $100 isn't a big deal annually. But just say, yo, look, I only want to put $100 in every year, right? So over 30 years, that one share, right, will keep recycling, right? Every time it gets to the point where you have $96 worth, it's going to buy another share for you, right? And so doing this over a 30-year stretch, let's calculate that one more time. All right, over a 30-year stretch, that would bring you $12,000, right? 12,411. Total return on that is 300%, right? Now, if you had your if you had your money in a savings account earning you 0.05% annually, it would take about 144 years for your money to double. No, I'm lying. Wait, it's way more than that. It's way more than that, right? So pretty much you wouldn't be alive to see your money double, right? Right now, they saying after 30 years, you will have a 300% return on your money, right? And that's just off of one share, right? Now, say you wanted to get busy, right? Say you said, all right, boom, uh, $96. I got $1,000 that I can put on this right now, right? So you bought 10 shares instead of one. All right, let's calculate that real quick. Still having the $100 annual contribution. It's quarterly. Everything is still the same. Let's calculate those returns over 30 years. Okay. So now that's $19,000 over 20 years. 381% return. Cool. Got that. All right. Now that's for 30 years. Let's see how it looks for 40 years. Whoa. All right. So look, let's think about that real quick. Let's see what happens. So for 30 years, it made $20,000, right? 30 years, it made $20,000, roughly $19,000, just under 20, right? It made that in 30 years off of holding 10 stocks and allowing them to recycle quarterly. And you just throwing in like a extra $100 just to, fuel the flames and all of that, right? After 30 years, you got $20,000, right? Now let's see what it's like after 40 years. 89,000, right? That's still just contributing $100 a year. That's a good restaurant meal a year, right? And the rest of it is still recycling on its own. And if you look at it down here, they kind of break it down for you how it moves, right? So, that first year you got 10 shares. The second year they buy you another share. Third year you got 12. By the time you get down to 40, you now own 784 shares of the company, right? Seven, seven, 784 shares. Um, with that equaling just under $90,000, right? Still, 90,000 is nothing for you to write home about, for you to retire on. But the fact of the matter is, if you had a job, right? Not to say that you don't have a job, but say you have a job, boom, making, say about $40,000, right? And you have a 401k. With that 401k, you would probably be contributing about $100 a check. You get 26 checks a year, right? Um, yeah, you get 26 checks a year. That's right. That is right. I believe so. Yes. You get 26 checks a year. So now let's do that. Let's run that back real quick. So say you had these dividends acting as if they were your 401k. So you continually contributed $100 every 2 weeks, right? 26, 26 times a year, right? Because 26 checks you usually get. So that would be $2,600. So if we had an annual contribution of $2,600, right? With the same 10 shares, everything exactly the same way it was. Right. So let's calculate that. Let's do it over 30 years real quick. 30 years. You got 310,000, right? 30 years. Now, a 401k over 30 years, it might get you that. I mean, yeah, it should get you that, right? Yeah, it should. 310,000, that's nothing to sneeze at, right? Now let's say, how would that look over 40 years? And this is assuming I'm going off my own age. I'm 36. I got grays in my beard. I ain't scared to say it. You should know how old I am. I'm not mad at it. So, boom, I'm 36. In 40 years, I'll be 76, right? So, how would that look when I'm 76 with this equation going? All right. So now that's $1.4 million, right? Now, granted, in 40 years, $1.4 million is not going to be or have the same value as it has right now. Inflation right now is over 7%. So, that's going to be good, but that won't like save my life, right? So now, moving into the question of how these dividend stocks can be passed on to your heirs, to your children, to your grandchildren, right? You can leave these in circulation for as long as you want to, because these are stocks that you own. You're the owner of Con Edison stocks, right? So say you wanted to still not getting too crazy with it, right? But so say you wanted to have this equation going for 50 years, right? So I'm 36. All right. So when I'm 86, boom, I'm 86 years old, $15 million. Like I said, in 50 years, $15 million is not going to have the same value as it has right now. But these $15 million can be used to transform into other modes They can be used to start businesses. They can be used to invest in other things, right? Loans can be taken out on this so you can invest in other things, invest in properties, right? So this is the seed capital, not just to sit on, but for you to plant and grow your forest, right? So if these numbers are sneezable, right? If you just sneeze at these numbers, it's not really that much. I could dig it, right? Because we got to be trying to elevate. We're trying to get as much as we can while we're here on this planet, right? Not to be greedy, not to overburden the earth, but to understand that um we've been provided with all these resources. You know what I'm saying? Natural and unnatural. So um, you know, it's a good idea to get some of it for yourself, right? So so yeah, $15 million. Now, what happens if you kept it going though? Even if you ain't touch it no more, right? You ain't touch it. And after I'm off of this earth, right? Say this went for another 100 years, because Con Edison don't look like they about to go nowhere. So say it was for 100 years, right? And nobody want to do calculations for 100 years. That's kind of whack. Does it let you go to 100? I think 50 might be the. All right, 50 is the max. All right. So let's stay at 50. All right. So yeah. So like I said, $15 million off of an initial investment of $960, and then an annual contribution of $2,600, right? And let's see if you made the investment and never put any more money into it, right? You didn't do an annual contribution. Your annual contribution was $0. So you just let these 10 shares work on their own for 50 years, right? What does that look like? Huh? It's not gonna do nothing. Whoa, hold on. That can't be right. Let me see something. Oh, don't get slow on me, computer. No, not while we here with the peoples. Hmm, that's whack. All right. Well, all right. So my computer's is not being agreeable right now. You know what I'm saying? I guess I want to take a break. So, but the bottom line is, the bottom line is that everybody has the capability to build wealth, right? In various different forms. This is just one form, right? However, we can all tap into wealth through various different mediums, right? And so, like I said, this is, if you go back, the $15 million that we was talking about, that was off of the $100 a paycheck that people normally put in. But $100 even isn't even that much, right? Like if you making $40,000, um, and for instance, there's plenty of people. Let me see, my niece is a good example. She makes about 45, right? And she puts away like $200 per check, right? In terms of her 401k, right? So that's $400. 40, let me see, $200 a check, 400 times 12 months, it's $4,800. Sorry. All right. So let's say $4,800. How does that look over a 50-year span? What are we talking about? Roll the dice. Oh, it's doing it again. This is whack. All right. All right, yeah. So we'll let it rock. Oh, there we go. All right. So $4,800 annually, right? $4,800 that will give you $28 million, 28.5. Now, granted, like I said, $28 million isn't going to be the same thing, but I would pray in that 50 years that this isn't the only thing that you'll be tapping into, right? But this is just an extra avenue of wealth creation that I didn't know too many people that was tapping into this, right? So for us to have this information now, for us to have the know-how about how to get these things done is very, very important, drastically important for our generations, for our future generations, for ourselves right now, right? So this is dividends, the magical world of dividends, right? Where you could take a little and make a lot, right? So I'm gonna stop there, right? I'm gonna let y'all eat that up. You know what I'm saying? We're gonna digest that. You know what I'm saying? No heartburn from me. So, like I said from the beginning, I thank y'all for being here. I want us to form a continuous relationship, a long-lasting relationship with each other. All right. Um, yeah, that's pretty much it. So listen, if y'all like what y'all see, all right, follow us. Follow us on Instagram at OYO Enterprise. Follow us on Facebook, OYO Enterprise. Follow us on TikTok at OYO Enterprise. And follow us on YouTube, right? Subscribe to the channel, you know what I mean? So you can get access to all the information that we spew out, you know what I'm saying? Access to the conversations that we spew out, and also get access to our services. OYO Enterprises helps everybody with cash flow management, tax minimization, business structure and development, and credit repair, right? And when you get all of those things together, you make yourself into a monster, okay? A financial monster, all right? Voltron. So, like I said, man, it's a blessing to have y'all with us, all right? And we are going to see y'all on the next episode. Remember, like, subscribe, follow, everything. You know what I'm saying? All the things that you could do it with us and for us, all right? We love y'all. We say peace.